Hello guys, I hope so you will be fine. So today we are going to discuss study unit 18 and its name is internal controls. So we are going to discuss in this chapter three topics. Topic number 1 is about control procedures. Topic number 18.2 is about system controls and information security. Topic number 3 is about security measures and business continuity planning. So here we go. Please remember unit number 17 and unit number 18. These two sections are called internal controls. And this is your 15% of your exam. So starting with 18.1. So it's called control procedures. So guys, in last class, we talked about what are internal controls. Here we are going to talk about control process. What is control process? Control process means to say like control always requires feedback on the result of organizational activity for the purpose of measurement and correction. So guys, we were talking about control process. It is similar. I can give you example. For example, when you prepare budget, right? So, and at the end of the period, we get the actual information. So, and actual results, we always compare with the budgeted information to see where we have deviations or where we have variance. So similar process we are going to discuss here. So that is why controls mean to say control requires feedback. It means like when we get some actual results, we always compare with the standard. Standard means say whatever was planned, actual results are compared with that, right? In order to identify the deviations, in order to take the corrective action. So that is why under control process, we have 5 stages, you can say, or 5 steps, you can say, right? The step number 1 under the control process is establishing the standards for the operation to be controlled. We always set the standard first, like how to do the things or what are the expectation or how we will do these things, right? So we will always set the standards. And then what we do under step number 2, we measure the performance against the standard. How we measure the performance against the standard? We always get the actual results and we always compare with the planned result. And the stage number 3 is what? Examining and analyzing the deviations. Sometimes your actual results could be better than planned results. Sometimes your actual results could be worse than planned result. So whatever deviations are there, positive or negative, we always examine, we always analyze those deviations. We are trying to identify the reasons why those deviations are there. Sometimes reasons are controllable, sometimes reasons are not controllable. And stage number 4 is what? We'll take the corrective action. Obviously, if deviations are negative, so we have to take the corrective action. In simple words, I can give you example. At the start of the year, we always set the budget, which is called standard, right? At the end of the year, we always measure the performance against the standard, means we compare the actual results with the standard. And then if actual results are different than standard, so those are called deviations. So if deviations are worse, for example, if you have a variances are unfavorable, so we have to take the corrective action, because we always analyze the variance, what are the reason, what are the causes for this variance, and then we are trying to take the corrective action. And number 5, based on experience. What does mean by reappraising the standard? Obviously, with the passage of time, we will change the standards or we will change the budgets. So it is like that. So these are 5 stages of control process, right? So whenever we set the control process and we compare the actual result with the control process, so what we have to do, an evaluation reward system should be implemented. Like if people are achieving the controls, we should reward them. If they are not achieving the controls, guys, obviously, so we should ask them what are the reasons for that. And what is the next point? The cost of internal controls must not be greater than its benefit. So I can just give you simple example. Whenever you put any control into place, for example, you have installed a camera, okay, to avoid or to reduce the risk of theft. So it should not be like that. Camera cost is 5,000, but the cash which you are trying to save is only $10. It means if you will install the camera, so cost of internal control could be greater than the benefits, but the cost of internal control must not be greater than its benefit. So these are stages under internal controls, and these 2 points we should remember as a note. Now, guys, we are going to talk about types of control. So there are different types of controls are there. So first category of control is called primary controls. Primary controls are divided in 4 subcategories, you can say. In simple words, you can say primary controls are having 4 types of different controls. First control is called preventive control. Second type of primary control is called detective controls. Third is called corrective controls. And the fourth is called directive controls. So here we go. First category, we are going to talk about preventive controls. Guys, first you also need to understand why we need controls. Controls, we always need to reduce the risk to an acceptable level. What is the risk? Risk is always defined as any unwanted event which can arise, which can affect the company in negative way. That is called the risk. So preventive controls are always implemented to reduce the risk to an acceptable level. So preventive controls, how it is defined. So here we go. Preventive controls are those controls which will deter the occurrence of unwanted event, or which will stop the occurrence of risk. So those controls which will help us to stop, which will help us to prevent, which will help us to deter the occurrence of unwanted event, those are called preventive controls. So these controls are effective if controls stops problems before they occur. So now we have to understand what are the examples of preventive controls. Preventive control, for example number 1, it's written here, like we always store petty cash in locked safe. Reason, because if you will put the cash in locked safe or in safe place, obviously it will stop the theft of cash. Second example, we always segregate the duties, right? To prevent the mistakes, to prevent the errors. Other examples, for example, in IT, like we always design a database, where we store the data in organized way. We always design the database so the user cannot enter a letter in the field that stores a social security number. Let me give you example. For example, when you create a Gmail account, Google account, so there, for example, you have to write your name. So in the name field, you are only required to enter alphabets. You cannot write your name 056, no. So you have to write your name in alphabets, right? If you will put any number in, if you will put any digit in alphabetical field, so system will not proceed with this information. So this is also called preventive control. So this control will prevent the error, right? So for example, in some accounting system, I'm just giving example. Another example, for example, we always use clean and certified copies of software. For example, you have accounting software. We always use the purchased version, right? So because you will not use shareware software, like crack version you are not using, because if you will use crack version, maybe all functions will not operate effectively. So this is also preventive control. We always try to use certified copies of software. Then checking new software with antivirus software. This is also preventive control, because antivirus software will prevent the risk of virus, right? So restricting access is another control. For example, in accounting software, if you are the accounts payable, accountant payables, so you should have only access to the payable files, not to the receivable files. So when we restrict the access within the software, that is also preventive controls, right? Then another example, like educating users, like for example, how to use the system. We always provide a training. This is also a preventive control, because training will tell you how to use the system. It will prevent the error, mistakes, which as a human we can commit in the future. I hope it is clear. So these are called preventive control. Then we have here, guys, another control, detective control. This is the second subtype of primary controls. So detective controls, obviously these, as per word, if you will focus, these controls will detect the risk. So how it is explained, detective control alert the proper people after an unwanted event. For example, if risk has arisen, obviously this control will detect that risk. I will give you example. For example, on airport, we have some security system to detect, for example, weapon, drugs, etc. Right? So those are also detective control. In building, for example, in building, we are also using a burglar alarm system, smoke detection system. These are also called detective control. Another example, for example, system logs. System logs, for example, in accounting software, if you're accounts manager, if you have a master access, you can track each transaction, like who has entered this transaction, when it was entered, what was the date, what was the time. So if, for example, transaction is entered by me and there is a mistake in that, so system logs can also help us, right? System log can also help us to help the manager to see who entered this wrong transaction. Understood? So these also called detective control. Or sometimes, for example, on Gmail, sometimes you receive the email from the Google that someone is trying to log in your account. So it means they have something in place to detect the failed login attempts, right? That is also called detective controls. I hope it is clear. Then we have a third category, which is called corrective controls. Corrective controls correct the negative effect of unwanted event. Okay, as per the name, you can see corrective controls. Obviously, it will correct the effect of risk. For example, I'm just giving you example. Let's say if there is a cost variance unfavorable. Understood. So we will ask the manager to justify why it is happened, and we will ask them to take corrective action to avoid these kind of cost adverse variance in future. Okay. Another example, for example, correcting errors reported on error listing. For example, you are working on accounting software, and maybe you have entered 6 transactions in a day whose debit side is not equal to the credit side. So system will report, okay, on error listing, like these are transactions whose debit side is not equal to the credit side. So you are going to correct those. Now this is called corrective controls, right? For example, isolating and removing virus. So obviously, if you're using antivirus software, that will also help to remove the virus. So that is also called corrective controls. Then we have a fourth category, which is called directive controls. Directive controls cause or encourage the occurrence of desirable event. For example, let's assume you want everyone in office on time. So this is what you want. So now this is called, now you are going to place some controls because you want to happen this, like everyone should come in office on time. So for that, you are going to implement some control. For example, you are maybe making policy, if anyone will come late, we will deduct the salary, let's assume, right? So actually, why you are making this policy? The reason, because you want everyone in office on time. So the big policy development or procedures development. So these are the examples of directive controls. Under directive controls, what? So directive controls cause or encourage the occurrence of desirable events. Any desirable events, if you want it should happen, so you are making some controls to that happen. So that is called what? Directive controls. I hope that is clear. Guys, please also remember, most of the time in exam question, they will ask you which controls are better. Obviously, preventive controls are always better, okay? Please remember, preventive controls. Now we are going to talk about, after primary controls, we are going to talk about secondary controls. So under primary controls, we have 4 categories. Which 4? We have preventive, detective, corrective, and directive. But under secondary controls, so you can see the word secondary. So these are secondary controls. So there are 2 types of controls are there. One is called compensatory controls. Compensatory control is also called mitigative controls. And second type of secondary control is complementary controls. Complementary. Understood? So here we go. So let's have a look. What is the compensatory? Guys, please remember, compensatory controls may reduce risk when primary controls are ineffective. Let me give you example. For example, we hired a junior accountant, okay, and he is recording the transaction into the system. So we allocated one person as a supervisor to that junior guy. Okay, so supervisor is rechecking all the transaction which is entered by the juniors. So now here, why? So here the supervisor is working as a compensatory control, mitigative control. The reason, because the primary control might not be effective. It might be ineffective. So that is why we placed another control. Understood? For example, we hired a security guard for surveillance purpose, but we also installed the cameras. Why? Because security guards, they may sleep, right? They may sleep. So that is why we install the cameras also, in case if primary control is not effective, so secondary controls are there. Okay. So as I gave you examples, 2 examples I gave you for compensatory mitigative controls. Now we have a complementary control. The word complementary control, you can see here, complementary control always work with other controls. Actually, compensatory control, you can say control over the control. But complementary control, you can say control with the control. So complementary controls work with other controls to reduce the risk to an acceptable level. Okay, for example, best example is like separating the functions of accounting. Let's assume you are dealing with the cash. So one person is receiving the cash, for example, one person is entering into the system, one person is responsible to deposit the cash into the system, one person is responsible for reconciliation. Now you can say there are 4 different people, segregation of duties are there, 4 different controls are there, but the ultimate objective of all those controls which are working with each other to reduce the risk to an acceptable level. So this is called what? Complementary controls. So compensatory controls always control over the control. When primary control is ineffective, you place another control. But complementary control, one control is working with other control. Objective of all control is to mitigate the risk to an acceptable level. Okay, guys, please remember, it is not necessary that the control will entirely eliminate the risk. No, our purpose is to mitigate the risk, not to eliminate. Understood? I hope it is clear. Now, guys, third type of controls we are going to discuss, that is called what? Time-based classification. Time-based classification. So here, guys, we have 3 types of control. One is these are also called time-based control. So one is called feedback control. Second is called concurrent control. Third is called feed forward control. Three types are there. What is the feedback control, guys? I can just give you one simple example first to explain. For example, you are a training company. You are going to appoint a teacher, right? So what you can do, guys? So first, directly you can appoint a teacher, send him in the class. Okay, so it means here you have taken the action. Action is what you have sent the teacher into a class. Then what you will do, you will gather the feedback from the students, right? How the teacher is. If student is giving you positive feedback, you may proceed with the teacher. If student is giving negative feedback, maybe you can say sorry to the teacher. So this is called feedback control. What happened in the feedback control? Feedback control, here what you will do, first you have taken the action. So after that, you are collecting the information about the action. And then based on that feedback, based on that information, you will try to decide your action was correct or incorrect. So this is what is feedback control. Now let's have a look. The bookish wording. Feedback controls report information about completed activities. As I told you, you have already taken the action, right? They permit improvement in the future performance by learning from the past mistake. Obviously, when you gather the information, if your action was not good, so you are learning from your experience, right? So thus corrective action occurs after the fact. Obviously, so do you want to proceed with the teacher or not? So you will take this final decision after the feedback. Another example for feedback control, inspection of completed good is an example. Like obviously, if goods have been completed, you are manufacturing the goods and those goods are completed. Now you are doing inspection and you are getting information. The goods are up to the par, goods are having appropriate quality or not, right? So this is called feedback control. Now let me say about feed forward controls. In feed forward controls, what you will do? Let me give you same example. Again, you are a training company. You are going to appoint a teacher, but if you will send the wrong person in the class, student may be dissatisfied and it could be a bad advertisement for you that this institute is not having good teacher, right? So you want to avoid this problem. So that is why how you are going to take the corrective action in advance before the final action. Okay, so what you are going to do, you are going to appoint a teacher. You are going to look his or her CV. You are going to interview with him or her. You are going to take a presentation. You are going to conduct a presentation. After presentation, if you are satisfied, then you will send the teacher into the class. So this is the example of feed forward control. Feed forward control, what you are doing, how it is explained. It is explained like that. In feed forward control, you always anticipate the problem and you are trying to prevent the problem in advance. That is called feed forward control. Okay, but in feedback, you have taken the action. After that, you are collecting information. Your action was correct or incorrect, right? But in feed forward, you are anticipating the problem first, and then you are trying to take corrective action in advance to prevent that problem. Okay, so these control always requires long-term perspective. Okay, so what is example? Organizational policies and procedures are example, because we always develop the policies, we always implement the policies to avoid the problems, right? Then we have a third category, which is called concurrent controls. What is concurrent controls? Concurrent controls adjust ongoing process. Like obviously when you monitor day-to-day activities, these are also called real-time control. For example, you are accounts manager, you are observing what your juniors are doing, right? If they're doing the things in inappropriate way, so you will take the corrective action immediately. For example, one person, he made the payment to the supplier without your permission or without any proper documentation. So you notice this, and now you are going to adjust this control. You are going to teach him that how to make a payment and which procedure he has to follow. This is called concurrent controls. Concurrent controls always adjust ongoing process. These real-time controls monitor activities in the present to prevent them from deviating too far from the standard. Obviously, if someone is not following the policies or procedure, you will take corrective action immediately, right? So example is what? Close supervision of production line or of accounting function of anything. So supervision is the best example, because when you supervise, you highlight the problems, you notice the problem, and you take the corrective action immediately. So this is what is the third type of control, which is called concurrent controls. So time-based classification is are having three controls: feedback controls, concurrent controls, and feed-forward controls. Now, guys, we are going to talk about financial versus operational control. This is overall fourth category of controls. So financial versus operational controls. To understand financial controls, you can simply assume financial control means, so these are those controls which you will place in the financial areas. Like for example, if you have a certain controls in accounting and finance department, so those controls are called what? Financial controls. So financial controls should be based on relevant established accounting principles. Understood? Simply whatever controls you have in the area of accounting and finance, those are called financial controls. Now let me give you example which type of financial controls you have in the area of accounting and finance. For example, proper authorization. For example, you cannot make any payment without the authority or without the authorization of manager. This is also financial control. For example, appropriate record keeping. For example, you are responsible to maintain all the records. This is also a control, financial control, right? If you will not maintain it, so your manager can ask you. Safeguarding of asset. For example, cash is with the cashier, checks is with the cashier. So these are called safeguarding of assets. So we want asset should be safe. So we are placing some controls. For example, we are keeping cash always in the lockbox system. Compliance with the laws and regulation. For example, laws and regulation, guys, accounting standard can also be the part of laws and regulation. Obviously, so in accounting, we also need to ensure that whatever transactions we are recording as per laws and regulations. Okay. And we are also handling with the contracts, right? So these all controls are called what? Accounting controls. So then, guys, we have a second category of financial versus operational control. That is called operational controls. Operational controls, guys. So these controls apply to the production and support activities. For example, other than simple words, you can say the controls which you are implementing in other than accounting and finance area, those are called operational controls. So those controls could be in administration department, the HR department, production department. So that is why the operating controls are also called what? Administrative controls. Understood? For example, what are administrative controls? I'm just giving you a few examples. For example, sale system. Sale is the complete process. For example, you cannot make any sales without the approval of credit manager. For example, credit manager will approve the credit limit of the customer, then you can make the sale. For example, you cannot write off the bad debts without the approval of credit manager. Right or wrong? For example, you cannot make any purchase request without the permission of, let's say, inventory controller. Right or wrong? So these all are called what? Operating controls. Okay, so any controls which is other than accounting and finance area, that is called what? Operating controls. I hope it is clear. Now, guys, we have a fifth category. We have a people-based versus system-based controls. As per name, you can see, if you are controlling anything with the intervention of the people, that is called people-based controls. Okay, for example, how it is defined? People-based controls are dependent on the intervention of human for their proper operation. For example, regular performance of bank reconciliation. Obviously, bank reconciliation is done by the accountant, right? And accountant is a human. It means with human intervention, you are controlling something, right? So that is called people-based controls, right? So then, what is the system-based control? Another example for people-based control, for example, you hired a security guard for the surveillance purpose. This is also people-based control. Then we have a system-based controls. System-based controls are executed whenever needed with no human intervention. In simple words, guys, without human intervention, when you are trying to control something, like with the use of IT or technology, that is called system-based controls. For example, you are installing cameras, it is system-based controls. For example, you are, uh, you know, even installing antivirus software, system-based control. Understood? So these are two, like whenever human intervention is there, that is people-based control. Whenever system is supporting to control something without the intervention of human, that is called system-based control. Okay, guys. An example is code in computerized purchasing system that prevents any purchase order over certain monetary threshold. This is also system-based control. For example, you cannot place the order more than 10,000 units. If you will try to place order, for example, of 11,000 units, system will not proceed it. This is also system-based control. Understood? So these are fifth category. So guys, so far we have discussed, if let me quickly remind you what we have discussed. We have discussed first of all primary controls. Under primary controls, we have four types, right? We have preventive controls, we have detective controls, we have corrective controls, we have directive controls. Then I told you secondary controls. Under secondary controls, I told you compensatory and complementary controls, right? Then we discussed time-based controls, in which we discussed under time-based, we discussed feedback controls, feed forward controls, and concurrent controls. Then I told you financial control versus operational control. Then I told you guys system-based control versus people-based controls. I hope so it is clear so far. Now, guys, we have here one more small definition, which is called control activity. Just understand, I told you in causal framework also, but let me repeat here. Control activities means say any action which we are taking, we stand for management, any action which are taken by management to mitigate the risk to an acceptable level, that is called control activities. Understood? So that is the control activities are designed and placed in operations to ensure that management's directives are executed. So we always place some actions into place. We always place some action, right? We always implement some actions to ensure that management directives are executed, like we are following the instructions of the management. So now the point is that which kind of actions are taken by management to mitigate the risk. So here we have a number of examples. For example, segregation of duties. So we segregate the duties to mitigate the risk, but segregation of duties I'll explain in detail just in 2 minutes. Then we also, guys, another example, another action which is taken by management to mitigate the risk, that is called independent checks and verification. Obviously, reconciliation we are doing sometime even in accounting, like we are reconciling our ledger with the supplier statement, right or wrong. So we also do the bank reconciliation. So that is also type of action taken by management to mitigate the risk of overpayments or under proceeds, right? Then we also place this independent checks. I will also explain in detail in a while. Safeguarding controls, I gave you a couple of examples. We always keep our assets, for example, our cash in the lock system. This is also safeguarding control. For example, if you have a server room, you don't allow everyone to enter server room. Only authorized people can enter. This is also safeguarding controls. We also, for example, installed antivirus softwares. For example, we also installed some, other kind of technology we always use to save our system from hackers. This is also safeguarding controls. This is like no need to explanation. I give you examples. We are also use pre-numbered forms, computer-generated invoices, computer-generated memos. So they're pre-numbered vouchers. So all these things also are control activities. We also use some specific document flow to control the thing. That is also control activity. For example, we will study in the accounting cycle. For example, when we receive the sale order, we send it to the credit controller. He will approve the sale order. Then obviously this is this approved sale order. Maybe will go to the warehouse. They will pack the goods. Okay. So according to the approved sale order, we will ship the goods also. So specific document flow is also, guys, control activities which will mitigate the risk. Another example for specific document flow, let's say you want to make a payment. So for example, payment for a payment against any invoice. Let's assume, so what you will do as accountant, so you will take the invoice, okay, as a supporting documents. You can attach also the purchase order against which this invoice is there. So then you can prepare a payment voucher, but this voucher will be signed by the accounts manager. So like this document is flowing, maybe in one university I have worked. So what was happening there? So initially we were preparing payment approval with all supporting documents. So then this payment approval and supporting documents we were sending to the internal audit manager. He was signing. Then we sent it to the president, president of the university. He was also signing. Then it was coming back to the accounts department. Then we were releasing the check. I'm just giving you example. This is also called specific document flow. This is also control activities. Understood? So now, guys, so this is the normal simple three things. But the initial first two things, segregation of duties, we have rules to study. And for independent checks, we need to remember 2 points. And then I will tell you how questions will be tested. Guys, here we go. We have a segregation of duty rule. So we have 4 types of functional responsibility should be segregated. And I will give you simple example. For example, you are, let's assume, director of a company. You want to segregate the duty of accounts department. So whenever you segregate the duties, or you want to segregate the duties in 4 functional responsibilities. So you will always try to segregate the duties in 4 different dimensions. For example, first thing, in simple words, what I'm trying to say, guys, you will ask 4 questions. Those 4 questions you need to answer, like who must have an authority? Who must be responsible for record keeping? Who must have a custody of assets? Who must be responsible for periodic reconciliation? So you will answer these 4 questions and automatically duties will be segregated. So let me give you example now. So these are 2 words. So this rule you have to remember, ARCR. A stand for authority, R stand for record keeping, C stand for custody, and R stand for reconciliation. This rule you have to remember whenever you are segregating the duty. Like who will have the authority in accounts department? Authority to approve something, obviously accounts manager, let's assume. Okay, second question you need to answer, who must have responsibility for record keeping, for preparing records, for example, senior accountant. Do you have to answer, who must have a custody of asset? What are the assets in the accounts department? Maybe cash, checks. Okay, so who must have a custody, for example, cashier? Then periodic reconciliation, who will do the reconciliation, like bank reconciliation? Maybe another accountant. So you will answer always these 4 questions. So whenever you will segregate the duties, always try to remember this mnemonic ARCR. Who will have authority? Who will be responsible for record keeping? Who should have custody of assets? Who must be responsible for reconciliation? Now, guys, let me explain in more detail. Then I'll tell you how questions will be tested. This was the mnemonic ARCR. Guys, for the authority, A stands for authority. For authority, different words can be used. For example, you have authority. He can use the word that this person have authority to do something, or this person is approving something, or this person is the signatory of something. So this means authority, approval, and signatory is the same authority word. Okay. Like for authority, he can use other terminologies also like approval, signatory. So it means these all are authority. Then for record keeping, he can use the word preparation, clerical work, data entry, timekeeping, all these words meaning what? Record keeping. Then for custody, he can use alternative terminologies. For custody of asset, he can use the word like someone is holding something. Holding means is having custody. Or someone is distributing something. Obviously, to distribute something, you should have a custody. Or someone is safeguarding. Okay, so all these words can be used for the custody. For custody of asset, word can be used holding, distribution, and safeguarding. For reconciliation, he can use the word someone is doing reconciliation. He can also use other term like verification, or someone is checking, or someone is inspecting. So these terminologies can be used. Please remember, guys, for reconciliation, like the person who is going to reconcile records. So these two rules should be remembered. The person must be an independent person. Independent person means that person must not have custody of asset. For example, I'm doing reconciliation of cash. When I was reconciling, I noticed that there is some spare cash because I have a custody of cash also. I can steal. So that is why the person who is doing reconciliation, he must be an independent person. He must not have custody of asset. Then what? That person who is doing reconciliation should not be connected with the original transaction also. Like that person must be 100% neutral, 100% independent, unbiased person. Now, guys, there are two possible questions are there in exam which they will ask you from this topic. Number one, when we violate the segregation of duty rule. Guys, as I told you, we have a 4 responsible function: A, R, C, R. Authority, record keeping, custody, and reconciliation. If one person is performing more than one responsibility, if one person is performing more than one responsibility, for example, maybe you are having authority also, you are also doing reconciliation, it is called violation of segregation of duty rule. Understood? Violation of segregation of duty rule. If one person is performing only one duty out of these 4, A, R, C, R, he is performing only one. Understood? Then, guys, then it is not a violation. Second question he will ask you. Second question he will ask you. He will ask you when we do not violate the SOD rule. When we do not violate the SOD rule, when there is no violation, obviously one person is performing only one responsibility out of these 4, out of AR, CR. So then it is not considered as a violation. Okay, so let me show you some questions now, how questions will be tested. For example, here we go, we are going to read a question. One characteristic of an effective internal control structure is the proper segregation of duty. Obviously, if you want effective internal controls, you have to segregate the duties properly. The combination of responsibility that would not be considered a violation of segregation of functional responsibility is, like, simply you have to identify out of these 4 which combination will not be considered as a violation, like where we are not violating the SOD rule. I told you example, guys, if any one person is performing 2 responsibilities or more than 2 responsibility out of A, R, and CR, then it is a violation. If one person is performing only one, so then it is not a violation. Question is about where we are not violating the SOD, segregation of duty rules. Number one, signing of paycheck. Signing means authority. And custody of blank payroll check. It custody. So it means one person is having authority and having custody. So this is a violation. But question is about where we are not violating the SOD rule. Number two, preparation. Preparation word is for record keeping. This is record keeping of paychecks and check distribution. This is custody. So it means record keeping and custody is also considered as a violation. But the question is where we are not violating the SOD rule. Then approval of time cards. Approval means authority. And preparation of paychecks. It means record keeping. It means authority and record keeping. These combination is also violation. But the question is about where we are not violating the SOD rule. Point number 4, timekeeping and preparation. Timekeeping is also record keeping. Preparation is also record keeping. So it is not a violation. So because it is same thing, record keeping, record keeping. So D is the correct answer. I hope so it is clear. Please confirm through the chat option. Is that clear? Here we have another question. Internal controls should follow certain basic principles to achieve its objective. One of these principles is the segregation of functions. And you know, under SOD, segregation of duty rules, we studied 4 points: authority, record keeping, custody, and reconciliation. Which one of the following example does not violate the principle of segregation of function? Again, which out of these 4 points, in which point we are not violating the SOD rule? Number 1, the treasurer, means a finance person, has the authority to sign checks, but gives the signature block to the assistant treasurer to run the check signing machine. Guys, the authority is with the treasurer, but he has just given the signature block to the assistant treasurer. He has given the signature block to his own assistant. It is not a violation of SOD rule because authority is with the treasurer. Then, and the custody of signature block, you can say with the assistant treasurer, right? So this is not the violation, I would say. Then warehouse clerk, clerk means he is responsible for record keeping, who has the custodial responsibility. He is doing custodial responsibility over inventory. Warehouse may authorize, he is having authority also. See, so clerical actually is responsible for record keeping, but he is having custody and authority. He may authorize disposal of damaged goods. So this is actually a violation, but this is not a violation. First one was not a violation. Number 3, sales manager has responsibility to approve credit and the authority to write up accounts. Guys, actually this is overall statement is incorrect, because it should be a credit controller. He must be responsible to approve credits and the authority to write off. It is not with the sales manager. This is overall statement is incorrect. Please note this. This has nothing to do with the SOD rule. I can link also with the SOD rule, because this authority must be with the credit controller, not with the sales manager. So that is why this is incorrect statement. Sales manager will not approve credit limit for the customer, and sales manager cannot approve. He should not have authority to write off the accounts from the accounting system. No, it is done always with the consent of credit controller. Understood? So this is not the answer. It is pure violation, because it should not be done by sales manager. It must be done by credit controller. Then the department time clerk is given undistributed payroll. Clerk is always responsible for record keeping. He is having undistributed payroll checks. It means he is having a custody. It is also a violation. It means this first one was not a violation. First answer is correct answer, guys. I hope that is clear. Let me show you more questions, guys. We have one more question on your screen. Accounting controls. Accounting controls, financial controls. Accounting controls are concerned with safeguarding of assets and the reliability of financial records. Consequently, these controls are designed to provide reasonable assurance that all of the following take place except. Do you remember? If you remember, I told you accounting controls will ensure that transactions are properly authorized, properly recorded. We are doing reconciliations, right or wrong. I told you all these things. So here they are telling you simply you have to identify from these four options which is not the accounting controls. Because the point is the accounting controls are designed to provide reasonable assurance that all of the following take place except, like in simple words, which is not the accounting controls. Number one, accounting controls permitting access to assets in accordance with the management authorization. Obviously, guys, it is accounting controls. For example, if you will authorize the cashier, he can keep the cash. If you will authorize the cashier, he can keep the checks, right? So it means accounting controls will ensure that access to assets is in accordance with the management authorization. Then B, accounting controls will also ensure that we are executing transaction in accordance with the management general or specific authorization. For example, as accountant, you cannot make any payments with the approval of, with the authority, without the authority of manager. Obviously, this is also accounting control. This is what is written here. So it is also part of accounting control. Then compliance with methods and procedures, ensuring operational efficiency. It is not a accounting control, it is an operational control. Actually, this is the answer. Okay, next, comparing recorded assets with the existing assets. For example, you are doing reconciliation of physical inventory with the inventory which is showing in the system. So this is also accounting controls, right? We can do after periodic intervals. Even you can match your payables ledger with the supplier statements, right? This is also reconciliation. Reconciliation is the part of accounting controls. So answer C is the correct answer. So this I already told you guys for independent checks and verification. As I told you guys, whenever we do the reconciliation, we have to make sure the person must be independent person. Independent person mean to say the person must not have a custody of the asset. Okay, and that person must be unconnected with the original transaction. So that person should be responsible for the reconciliation. And reconciliation, so you are comparing two things, right? For example, you do the bank reconciliation, you're comparing your cash ledger with the bank statement, right or wrong, to identify sub transactions if it is missing or why cash balance is not equal with the bank balance, right? You are trying to identify those things. So this is what is called independent checks and verification. Pre-numbered forms, I already told you. This is also a control activities because control activities may include segregation of duties. I told you it may include independent checks and verification. It may include pre-numbered forms like we are using computer generated forms. That is also a type of control activities. Then specific document flow, I told you. Now here guys, we have a two more definition which we need to understand. What is tracing? What is vouching? Mostly guys, this technique we also use in the audit, right? For example, when you do the audit, mostly we take the trial balance. From trial balance, we pick the ledger. Okay, from the ledger we pick certain transactions and we go back to the source documents, right? For example, I want to see this $100,000. There is a transaction. For example, what is the source document for that? So if you are moving from ledger to the source document, so this transaction, this is called actually the vouching, right? This is the vouching. Tracing is something different. Tracing is what? Tracing follows the transaction forward from the triggering event. For example, I have 100 invoices. Out of 100 invoices, I selected one invoice of $50, and I want to see where this invoice is recorded in the sale. Okay, so if I am moving from source document to the amounts which is recorded in the system, so this is called tracing. So both have different objectives. So here we go. Let's see how it is defined. Guys, here I'm explaining first tracing. Tracing, remember, we start with the source document, we move to the recorded value. Tracing follows a transaction forward from the triggering event. Triggering event means the source document to a resulting event means the amount which is recorded in the statements, right? Ensuring, what's the purpose of tracing? The tracing ensure that transaction was accounted for properly. Tracing is used to gain assurance that liability was properly accrued or a transaction was properly recorded, as I told you. What is vouching? Vouching is the mirror picture. In vouching, we'll take figure from the financial statement, we'll move back to the source document. So that is why vouching, in audit, mostly we do the vouching. Vouching tracks a result backward to the originating event, ensuring what's the purpose? That recorded amount is properly supported. Here in tracing, we are seeing that transactions properly recorded. In vouching, we are seeing that recorded transaction is properly supported by source documents. Understood? So these are two definitions. Here is we have a picture. If you are moving from source document to the ledger, this is called tracing. If you are moving from ledger to the source document, this is called vouching. Understood? So I hope it is clear.